Time now for my regular look at the WTI crude oil price. It seems a long time ago. In reality, it was only a couple of months back that we had such price aspirations of getting towards 200. Volatility was rife. We had the conflict kicking off in Ukraine, which sort of gave it that kick up the pants to move on upwards. Since then, things have started to quieten down. Now, is it business as usual? Where will that price be heading next? Well, I'm going to have a look at some of the fundamentals, sentiment and technical analysis to see where it could be heading next. So with that, let's dig straight in. So you're looking at my technical analysis sentiment tools, and at the bottom we have seasonality. At this time of year we see that little dip before moving up in through May into June, and the COT data, that's the two lines above, the red and the black line, both really doing what I expect versus the price. With the price coming off, I'd want to see the black line moving down. That's the large speculators, traders, and the red line I'd want to see doing the inverse of the price. That's the large commercials, and it is. So we've got bearish, sort of weak bearish situation there at the moment playing out on those indicators. So now a quick look at inventories. Well, the last 2 weeks we've had some sort of more outliery type numbers against what was forecasted. Go back to that one where we got an actual of 9.382 million barrels versus a forecast of 0.863, and last week's minus 8 million against a positive 2.47 million. So they've been a bit sporadic at the moment. Read into that what you can. It is very difficult to use the inventories to gauge price direction. Outliers do help, but that correction, maybe it neutralised things, and this week forecast 2.167 million barrels, so we'll watch that closely tomorrow when those numbers come out. So for the rig count numbers, I like to use the US line, and the change from the prior count +2, change from last year's +257, so all still looking pretty bullish there. So onto the weekly line chart then, and really not too much to take away from it other than price pulling back from those highs, hovering around the 100 area, staying within the shaded 2 standard deviation area, really pretty much heading on to the mean. And in terms of pullbacks, well, we got the trend line in place there, that pink line. That's around the mid 70s areas. That could be a serious pullback number, or anywhere in that yellow shaded block up to about $80. But at the moment, it's looking negative, but it's nothing dramatic there at the moment, and we're going to see how that acts around that mean of the 2 standard deviation area. Maybe use it as a pivot point to bounce back, or like I say, head towards that 80 sort of zone. If you're bullish oil, the 4-line break chart has some numbers for you. Great for spotting reversals, this type of chart type. And aggressive, $103.50. If you want to be a bit more cautious, a bit more patient, wait till it breaks up above 120. That's set on the daily line break chart. We want to speed up those numbers, lower that time frame down. So daily Heikin-Ashi chart, well, at the moment our signals are bearish at the bottom there. Volume and volatility running just below average, really. Oil volatility is normally prone to spikes and fast moves at the moment, trading around 50% per annum. Now heading on to the price, I've drawn on a couple of purple lines there to form a triangle pattern, and well, you could be looking for a breakout above that to move the price on upwards. Don't forget that support green line around that $70 mark, where the price has bounced many times in case of a serious pullback. At the moment though, pretty neutral in terms of price action, with a slight hint of weak bearishness to it. So the Renko chart using a $1 block size. Our signals, bit of a mixed bag at the moment. Trend is negative with the DMI at the bottom, but the 2 indicators above are positive, so pretty much a neutral takeaway there. The trend over 22 has been up but flattened out really from mid-March within a sort of range of say $15 of bounce in the terms of the price. Now, where's the price heading next in the shorter term? Well, we've got a sell signal at the moment below the 2 pink line box breakout, and to the downside you're looking $90, $80, $70. To the upside, the Fibonacci areas 115, 125 and 145, but that will require, I would recommend, a serious fundamental boost to get it up there. So based on the technical analysis, then I'm going to go neutral for WTI crude oil in this video. The Heikin Ashi, much of a mixed bag. Renko a bit more neutral. The other factors, seasonality, COP, bearish, rig count line, break chart, bullish, inventories neutral. So like I say, a mixed bag all round. In terms of targets, upsides 1.5 and 2.75 to 1, downsides 2.12 and 3.37 to 1. So overall then, a neutral score for oil. So WTI, a tough one to call at the moment. It would only take a small spark of some fundamental factor to get that price on moving high again up to the 130s, 140s possibly. But at the moment things are calming down. We're seeing volatility and volume calming down. Where it's heading next, well, it's in no man's land at the moment really. So I think you've got to keep your eye on the fundamentals and time your way in using the technical analysis. So let me know in those comments below where you think the price of oil might be heading next. What's going to make it move? Let me know, like I say, in those comments. Love to hear from you. And if you've liked today's video, please give us the thumbs up. Don't forget to hit the subscribe and bell buttons to receive future notification of content I will be producing. And all that's left for me to say is thanks for watching. Good luck with the trading. I'll see you in the next video.